Morning, everybody. 8:18 a.m. It's February 5th. Welcome to my channel. Now another wild day we had in markets. Another wild day. Of course, the market was all mixed yesterday again, and personally, I kind of had my first disappointing day. Not for exactly the wrong trades per se, but just disappointed that yesterday I had Trump said something, I believe, or Iran was. There was some news that came out that knocked me out of my first trade, which was not a bad trade. That you can't control, right? Then I had a poor entry on a long when I thought we were bottoming. I got a little too anxious, and that's not part of my style. So I took a loss there. That's all good and fine. My next entry was perfect. Okay. I pretty much was hitting the low on a pullback. Got in, got immediate burst up. I think I was up like 12 points or something like that. And I was like, okay, cool, great. I had a 43-point target for 10 points of risk over a 4-to-1. Okay. So the market pushed up to, like I said, about 12 points or so. I went to break even. My entry was about, I'm trying to think here. It was 68.73 yesterday. Okay. If you look at the chart, that's a pretty nasty, beautiful entry, right? I went to break even based on this bearish engulfing candle. And if you look at the charts, it literally went, I think, only 2 points against me. It never really would have went near. My stop was the low of day. Never went near it. And then eventually played around, pushed back up. And then I was watching it, and I was like, man, I this was the reason I was long. I thought all my indicators were oversold. Basically, I had almost every major stock hit its expected move to the downside for this week, including the QQQ came down. It was just like, all right, everything's gonna fire off for this long. Now, the market did not make it easy. It chopped around that area for a long time, but eventually it worked itself out and hit my 43-point target when I looked back at the market. And I was just like so pissed. And I took two short trades because it was wild after that, which made it kind of salt in the wounds because both short trades that I got in, I was also up, I want to say 10 points. So I'm reading the market fine. I knew that those short trades were probably not the best because my long trade I believed in. So I hit a break even, and then I like took a smaller loss on one, and I was just like, and then later on I was telling my community, one of my good friends in my community, I was just like, I still believe in that long. That should work itself out, and it did. Boy, did that I'm not gonna lie, it pissed me off. I was in the long, and that trade would have been, like I said, over a 4-to-1. It would have made me have a day that was like up close to 400, up for $450 or something like that for the day. And I would have continued just doing what I've been doing, basically pulling money out of the market every day. That's really annoying. I worked itself out. I've been having such a great run. I was, I guess, due for a day, but this is not a day where I went tilt or something. That's where it's like, it wasn't dumb And I had excursions in all of my trades, except the one first long I took. I did have a little excursion that one, but the other ones, 11, 12 points. I mean, I don't trade like this, but I could have took the first, the second long I took, like I said, was up 12 points. I'm in an eval. I could have just been like, move my stop up or whatever. I don't want to trade like that. And then the two shorts, both. I could have probably been break even on the day if I just was like, all right, let me just take these scalps. But that's not how you. I don't want to trade like that because that creates bad habits. But needless to say, it would almost be different if I went tilt or something. And you're like, oh my God, I saw red and I was in the long. That had a 43-point target that got hit. Boy, that burns. It took a while to work that out of my system. Probably around 8 o'clock or something, it was finally starting to like stop running around in my head. Um, but I like to just be open and transparent. This is how trading is. Like I'm on my 10th week of profitability in a row. Um, I'm still seeing the market like a laser beam. I that long I was very, the lesson I'm gonna say from this day. Okay, this is the lesson. Is see the prior day I took that long and nailed the 26-point long, right? The prior day, based on kind of almost the same kind of setup. And I was telling my community, see, the short is probably a poor short in this case. You're not going to get a big move. And then yesterday, I hit the same type of long, but that was worth the risk. I was worth the risk of seeing if it could break the lower day. I was more happy with that trade because I had a lot of things in my favor. And the break even thing, it whipped me out by a couple points. And then it took a while to work itself out, but I believed in it. Those shorts that I took after that, I did not believe in like that. I was going against my original thesis, which was the stronger one. That's the lesson. So even if I hit break even, let's say I hit break even on that, after that I should have just called it a day. I should have called it a day, and I wouldn't have took the next loss. That wasn't a full loss, but I wouldn't have took it. And the lesson is when that risk is worth it, and I believe in it, and the lower day has to be taken out for me to be wrong, I probably should just sit in that trade or reduce my risk a little bit. My risk was 10 points. I could have made it like 7 or 6. It would have never got hit. I think, though, I don't want to do that. That's being cute. Keep it at the lower day. These are all things that you have to do. And I know, even though I've had a really good run of trading, really good. Okay? Very consistent, very patient. And yesterday, none of that really failed me. It was just that long trade whipped me at break even. And I know that's trading. It's going to happen. It's going to happen. Okay? That trade I had to believe in and not go to break even. I should have watched it a little bit around my entry. It just played around my entry. Man, that was frustrating. It's one thing to go tilt, and again, I don't want to feel tilt, but like you just traded like crap. There's nothing to say that you were in the trades. You didn't miss the trade that you wanted. I was in the trade I wanted. I was in the trade I wanted. That was the best trade of the day, and I was in it. No heat, basically. But it came back and hit my break even. Boy, that's annoying. These markets have not been easy, and I've been excelling. So that's why, yesterday should have been a green day. But this is trading, right? I know traders that I respect that have been trading 10, 20, 30 years. They still will make a mistake, right? They still will do something that they shouldn't have. But my thing is, I've been doing the right things the majority of the times. I got to be positive, and I had to let myself get pissed off yesterday. I mean, I didn't go crazy. But at first, I was trying to keep my composure, and I just had to let it out, get pissed off, say this is bullshit. and just be able to be mad for a sec, and then it dissipated. And I had the best night's sleep. I don't know how that works. I don't sleep good lately, and I had the best night's sleep last night. I don't know why. I thought I would have been up thinking about what did I do. So, just want to share that with you because I want to be transparent, right? Because this is trading. This is the real thing. Does this take away all of the process for 10 weeks of every week being profitable? No. And I did the right thing. I read the market right? So there's positives. All right, let's get into it. All right. It's my little journal. All right. Welcome to my channel. My name is Steve Gonzalez. I use market profile and final profile to find structure in the markets along supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge that I share with you. Okay. Use market internals, anchored VWAP, some ICT. Okay. I expect it move to the downside. Man, that thing is amazing. Okay. That indicator is amazing. I share it with you guys for free in my Discord. That thing is amazing. Okay. Amazing. Part of why I went long yesterday. Okay. Now, hopefully you join me every day. You can get my little journal, my little psychological rant, and I give you the market story, the market news, the economic calendar, giving you the raw deal of the markets, okay, with technical analysis and the long and short trade scenarios in the Nasdaq and the ES futures. All right. Now, you want more in-depth coverage? You're going to join my Discord, Confluence Trading. Go to my YouTube homepage, click on the link, and sign up. What are you waiting for? There you will get my weekly expected move indicator. We will do a run through of how important that is to have on your charts. It's such an edge. I can't say it anymore how much of an edge that is that I give away for free. You could put on Thinkorswim and then put it on your phone and just see it there all the time. Big edge. Big. And I know my boy Randall, he puts it on his chart religiously and he's blown away by it. Rosita in my community, I don't know if she still puts it on or not. I don't know. But you're doing yourself a disservice by not putting that indicator on. And I give it for free. Okay? Based on the options market. Now, let's get into this. Bitcoin is in trouble. All right? It is in trouble. Let's go to the charts. We got a VIX that's at a 20. We're going to have very nice tempo, very nice volatility right now. Okay? Very nice. That's why I've been trading MES. All right? I've been averaging around a 10-point risk, 4 contracts for myself. All right? I'm going to be zoned in laser today. Yesterday was erased, and it's a new day again. Let's move on. The VIX up 12%. 30-year bonds being bought up 0.30. The dollar is flat. The Dow is down 0.30. ES down 0.5%. Russell down more than 0.5%. Nasdaq's down 0.70%. 10-year yield is down. That means bonds are being bought. A lot of signals here. 30-year bonds are being bought. Yields going down. Remember, people buy bonds for safety. I don't know. That's not huge, but let's just keep that in mind. Gold's down 1.21%. I was going to buy a pullback in silver, but I said, you know what? Let me hold off on that. And I talked about a position in Hood, a position in Coinbase. Okay? Coinbase is getting destroyed. Now, don't get me wrong, Hood, I want to invest in, but I'm going to wait. Remember, I'm not a financial advisor. Do not take that as financial advice, okay? This is just what I'm looking at. Okay, Bitcoin is down 5.27%. It's down under 70,000. It broke 77 and it's falling. We can look at the chart in a little bit. Silver, look what I'm talking about. Silver's down 8.8%. It's back down to 76. Silver is a squirrely animal. That is a volatile monster. It's very volatile compared to gold. I still have my core position. Okay. Netflix, I'm still waiting for maybe a 75 drop. It's playing around with 80. It did hit expects to move to the downside. And that's got that Warner Brothers holding Warner Brothers thing going on. Okay. Mag 7 Plus. Look at Broadcom. Look at Broadcom. Up 2.61%. Netflix up 0.85. Nvidia up 0.15. Berkshire Hathaway up 0.13. That's not really much. Let's go to the one percenters. Meta is down 1.23%. It's taken back all the gains from earnings. Tesla's down 1.64%, under $400. Amazon's down 1.63%. They report earnings today. I forgot to put that in my headline. Microsoft down. Man, Microsoft's getting destroyed. Almost down 2%. Google reported earnings, and they are down almost 4%. Coinbase is getting destroyed. Down 5% to 160. That thing was at 400 at one point. That's because of Bitcoin. Very, very interesting. Now, we'll get into the daily chart of what I think is going on here, okay? Now, let's look at top sectors. Costco, remember, that is a staple. And I was eyeing that up in the 800s. Well, yeah, it's almost up back to 1,000. Okay. PepsiCo, I was a holder in that, about 145. They're getting love now, staples. Same with McDonald's, even though McDonald's is part of consumer discretionary, it's looked as a staple. Walmart, woof. I think it reached a 1 trillion market cap. Don't quote me on that. I believe, and I'm a holder of Walmart. I'm liking that. Okay. Now, over 1%ers here. Caterpillar down over 0.5%, Uber down 0.64%, Chevron down 0.68%, Exxon down 0.74%, Oracle is getting smashed 1%. GE Vernova was at $800 the other day. I probably should have trimmed a little more, but I didn't. Up 1.17%. NEM, the miners, down 1.85%. Palantir down 2.44%. Qualcomm reported earnings not good. I think there was a lack of cell chips, or the lack of sales or something like that. That's knocking them down. Okay. Now, what's been going on in our markets is, let's go to a granular list before I talk about that. Okay. Now, Hershey is like a staple. Look at these. Hershey up 3.87. Hims has been getting smashed. It's holding around at 25. I used to own Hims at like 28 or something. Got out of it a while ago. Okay. Zoom. Is that Zoom? Up 2.83. Cardinal Health up 2%. Bristol Myers Squibb up. All right, not a lot of ups. All right, let's go to downs. Woo! All right, I still want to buy a jacket from these guys. All right, they're down 16.79%. Canada Goose. Silver, look at that, down 11% on the ETF. Iris Energy down 7%. That's Bitcoin related. MicroStrategy is getting destroyed. Michael Saylor with this Ponzi scheme, supposedly. This is really bad. Riot, also Bitcoin related. Ralph Lauren, that is down 5.5%. Mara Mining at $7. Woo! IBIT ETF down to 5. This makes sense. ASTS space stock down almost 4.5. Hood is almost down at the 50%. Down 50% from the highs. I am interested in Hood. Okay, I hate that it's tied to Bitcoin so much because it's a great company, especially with the contracts, and I think they have Kalshi or Polymarket. Don't quote me on that. I know there's one of them, but they made it a lot of money. So I am high on Hood. I wish it wasn't so tied to Bitcoin. All right, Rocket Labs down. All right, folks, this is crazy. All right, so let's move on. Let's go to our sectors. Look at staples. And I got staples at $75. which I had to cover calls on it as well. I made money on it, but man, I wouldn't mind if still holding that. That would have been a nice chunk of change. All right. Now, that's leading. That is not a good sign. All right. Up 0.30%, followed by utilities. That's a little defensive, right? Financials down 0.04, semis down 0.15. So today, semis aren't real super up or super down today. Now, I don't know what to expect in the market today. That's a little bit of a less volatility there because, like, usually technology is down 0.35. Basic materials with the metals, technology down 0.41. Energy is down 0.61. And communications is the laggard with Google. Now, remember, Google is Alphabet is split into Goog and Google. And they're basically together, I believe, 5 or 6% of the market cap, the S&P 500. They're a big weighting. You just got to put them together because they're one company. Okay? So, what's been happening in our markets, right? Well, software, SaaS stuff that via the web and stuff like that you can use is getting slaughtered because of Claude Code, Anthropic with this model. I believe, don't quote me, that I saw that for $20 a month can do work of like a whole whole IT service, a whole thing where people can use this for $20 a month versus paying all these employees. So software companies are diving. I saw a post yesterday with all the software, Snowflake, ServiceNow, like a bunch of these software. That's why Microsoft is going down. Salesforce. They're tanking. Software is tanking. Now remember, I'm trying to use this bot in my Discord, which it can do stuff for you while you're not even there. Okay? AI is not going to replace people yet like that, right? I don't think that's going to happen overnight. But if some AI agent can sit and do a job faster and better than a human of a whole, let's say, department, a company's going to pick the bot, right? So that's what's going on. Now, Bitcoin, woo, my lord. It's almost at a 50% haircut. All right. Let's get into the morning prep here. Let's see what's on tap for today. All right, we had 8:30 a.m. initial jobless claims come out. They don't really move markets, all right? We got Jolt Jobs at 10 a.m. Okay? Jolt Jobs at 10 a.m. All right? So, today, all right? This is not even right. I'm still working with this bot. There's some stale data that it reports sometimes. I mean, this is not right. All right. Crypto, talking about Bitcoin, massive sell off. All right. Earnings before the market, there was Shell, there was Lynn, ConocoPhillips, Bristol Myers Squibb. All right. After today is Amazon. That's what we really want to look at is Amazon. Okay. It's pretty crazy. All right, it's pretty crazy. We're gonna get into that's the calendar for today. Let's go into more detailed stuff here. Like I said, I'm still working on stuff with the AI agent. You know, sometimes it nails it, sometimes it grabs stale data. Like so, we're working that out. So let's look at the calendar here. Like I said, initial jobless claims don't really move markets. We're gonna move over to the financial juice just to see if there's Trump stuff today. Look at that. Trump attends National Prayer Breakfast. All right. What else here? Fed Bostic speaks. White House Press Secretary Levitt at 1 o'clock. That's pretty much normal stuff. Trump makes an announcement. That's at, what is that at? 7 o'clock. So that's not going to matter. Okay. U.S. stock futures fell as private jobs data fuel fears of economic slowdown and technology stock extends losses. All right, Bitcoin and silver plummeted. All right, that's what's going on there as far as calendar. Now, as far as what stuff's going on, basically, Alphabet went way over the capital expenditure expected, which is that's again more spending. Qualcomm, I told you, slumped after semiconductor warned that the second quarter will be pressured by industry-wide memory supply constraints and related pricing issues affecting handset customers. Okay, Amazon stock slipped ahead of Valentine's earnings. Okay, even though the company could cut a computing business, Amazon remains one of the biggest sources of revenue. Okay, we're gonna end there. We're gonna go to some news. Says Google goes from laggard to leader as it pulls ahead of OpenAI with stellar AI growth. Let's see here. We just read about that AI. So, U.S. index futures were largely steady. Investors weighed Alphabet's hefty AI-related spending plans against its strong quarterly results, while attention turned to Amazon's earnings due after the closing bell. Let's see. In Europe, equities edged lower as investors digested mixed earnings from Shell and BNP Paribas. We'll keep watching on the European Central Bank's policy decision. Asian stock markets fell as the global slide in tech and precious metals weighed on regional benchmarks, with Japan's Nikkei extending losses and Chinese shares weakening further as trading activity slowed ahead of the upcoming holiday period. All right, here we go. Commodities prices slid, led by silver in a broad market sell-off as investors reversed an earlier rush into hard assets after geopolitical tensions eased. Silver tumbled and spot gold retreated from a near 1 week high. Oil prices also fell after the United States and Iran agreed to hold talks and following a positive telephone call with the U.S. Chinese leaders. That makes sense. Geopolitical tensions eased. The metals are going to take a break. Oil is going to pull back. That's what's happening. The dollar, meanwhile, climbed to a 2-week high while Bitcoin dipped below 70,000 for the first time since November 2024. November 2024, not 25. Okay. There's a lot of news down here, but we covered all that stuff already. All right. I think we're ready for our market internals. All right. Our market internals. I'm telling you right now, this again is why I was long. Okay. This is not even as weak as it was yesterday. The prior day was like negative 700. This went down to here. Right. And I was all about, this is SPX, but this is where your boy was. Let's say this is that level of support, right? I got long, right on that pullback, and in this price structure, right about would be around like here, with the stop here. This is where I was talking about the salt in the wounds. Literally, my entry was here. This is where the market kept finding support. Right there. Right there. And then this is my initial, let me see here. Yeah, I'm sorry. Probably in here is where, yeah, in here, I believe. And I got that move. That move. That's what happened. I got that move, and then it pulled back. And that's where it hit my break even. And I was like, and then it played around there. And then it made a move, and that's where the market was just whippy. But then eventually I knew, I was like, I know this is going to work itself out. And it did, right? Now, internally, we were weak, but look at the recovery here, and we didn't end that much. Now, the beginning of the day was disgusting. Look at the internals. That was what the market was doing. It was the gross. It was disgusting. Then we started to get weak. In this, the ticks, I talked about that the other day. These ticks, again, in the beginning of the day, right around this area, they started to hold red. And I was almost going to short that pop up. Okay, and this is where that news came out, and boom. The news with Iran was talking nuclear talks and didn't want to talk. That's what pushed the market down. Okay, that's what pushed the market down right there. Boom. Okay, so I had a lot of my edge working out yesterday, and I was talking about it live in my room. I was like, ticks are holding red again. We're probably going to just keep getting pops sold. That's what was happening. And then I said, wait, we probably got to wait till the lower day gets hit in the ES, and then we just ran through it. That's where all of my expected moves were getting hit. And I was like, okay. I tried to get long, I think here. jumped the gun. This is what stopped me. Not smart. That was not a smart long. And then I remember I did get long, and then I would have hit that 40, 45, 43 point winner, right? So, internals all day, overall market was not weak. Look, ADD was positive. NYSE's ADD was positive. Valdez were not in danger of a big sell off. Again, this is what made me want to go long. Now, QQQ, now you can't see it here, but it almost hit its expected move to the downside. Okay? We're going to move on to the daily charts, and I'm going to show you, we're going to go over some of the expected moves that are literally like shouting at me. Okay? They're shouting at me. Let's get into the daily charts. All right? Now, this is what I'm talking about here. Okay? I want to show you something. What you always got to be mindful of. Okay? In these charts. This is very important, what I want to show you. This is why I wanted to get long. Okay? Let me get my marker. Okay. Look at SPY. Now, remember, at one point, the candle was down here. It didn't have a wick. Now, very important, we broke the 50-day. We broke last week's lows. We were down here, and I was like, wow, this is like not the best. But I said the internals are still not so crazy weak. Tech is weak. And then we started to move back up. Right? I was like, oh, God, that's a sweep for now. That wick. That's a sweepy. And then look what we did. That's the rule, right? So, this market, right, just keeps getting bought. It keeps showing this over and over. Look at this wick. Look at this wick. Look at this wick. Look at this wick. Okay? It's almost like telling us, I'm not ready yet. I'm not ready to go down yet. Because you know why? Other sectors are getting money put into them. Tech's getting rotated out of. But the other sectors are still pushing. Okay? All out sell-offs when you close down here is when everything is red. All right? Now, where are we? We are at 681.20. We are gapping down right now. This market is telling us most likely it's not begrudgingly trying to go down. It's begrudgingly trying to go down. Okay? Now look what's happening. It's kind of changing. Higher low, higher low, higher low. And then you got a lower high, and then a lower low and a lower low. This could be the swing high. We could be ending up here. 100-day moving average, last month's lows. That swing low. It's begrudgingly trying to go there. Okay, in futures right now, we're looking at the 100-day moving average, and we'll look at that right now. Okay, not an easy market at all. At all. Look, remember I was saying, hey, look at this higher low, right? This had a higher low at one point when I was in the morning, but look at this. This is ready, I think. It's getting ready. With this tech, Bitcoin, that's a risk-off sign. Right? See, look, we're trying to sweep these lows now. So, I think the destination wants that swing low around the 68.14. That's last month's lows. It's battling the 100-day moving average. Okay? That's what it looks like to me. Now, if we have a mixed market again, it's not easy. But what's been happening, if everybody notices in the markets, is we sell off because tech's weak. Then tech hits like all the major tech stocks hit bottoms. And then you get the late day surge because the market isn't overall weak. Now, I should have had the first long, the prior day, on Tuesday, was a great long based on that information. Yesterday, I was in long, We know the story, but that should have been another monster trade. So that's what's been happening. So, but what I have not taken advantage of, but it has to be a setup, is the early short. Because the early short has also been a monster move. That's the pattern lately. Early short, late long. Okay? We have to see what happens here. Okay? Qs. Now, this is what I wanted to show you. Look at the expected move to the downside. That's that red bar. That's at 599.74. Telling you folks, go to my Discord, put it on your chart. Okay, we didn't almost touched it yesterday. Quick explanation. My expected move looks at the options market on Monday morning based on Friday's close and for the following week's expirations. It mathematically determines the expected range. That would be the expected move to the upside to the extreme, the expected low to the downside to the extreme. That is what the options market has priced in. Okay? It's a cheat code. It's a cheat code. And that's last Friday's close, that black line. That's last week's close. Now, look at that. It almost hit it yesterday. Okay, I was like almost waiting. I was like, and 600 obviously is a big negative gamma level there. So I was like, all right, that probably is the bottom for today. And it was. Okay? Very important to pay attention to that. I have to say to myself, if I'm down here, I don't really think short. I'm going to go against the probability. I'm going to go against what the expected move in the options market is. Doesn't make sense to do that. Where are we at now? We're at 601. 601. We're down at the lows. We're not gapping down. We're down at the lows. Futures. Let's look at them. All right. Let's back up here. This is important. Okay. We took out that swing low. Now, we took out this pretty much almost equal lows here, swing lows. This is very bearish. Lower high, lower high, lower low, lower low, lower low. Remember, this is very important. Okay? You're coming from very high trading volume. The farther we move away from this, and this is very important to realize this now everybody knows I like the Power of 3 AMD, right? So check this out. If we box this off, I don't know if Rosita or Randall or Amalio or on my stream right now. Okay? This is accumulation, folks. Looking at it on a daily chart. Accumulating, accumulating, accumulating. That, my friends, is the manipulation. That was a trap. That's also called a look above and fail. This, when you look above and fail in balance rules, you go back to the other side of balance. We did that. Check mark. However, a look below and fail generally means this is called a measured move. Okay? Which means you take the width of the balance area, and that usually is like your destination to the downside. You double the width of the balance, and you usually go down to the balance. That means you can possibly go down to a previous monthly lows here, around 241. This is very bearish. And you don't have good structure here. Okay? It's very important to see that. And you have a catalyst of this Claude code and Anthropic with this tool that can replace these SaaS software companies. So you have a catalyst with you driving this lower. That's why every day tech's relatively weak, and then it kind of tries to bounce. Right? We did not make all-time highs again. Very important. All right, so look at the breath. Smell that breath, the market. Believe it or not, yesterday improved. Remember what I said? The overall market's not that weak? Well, because this is the overall market, right? S&P 500. We improved the breadth yesterday. 67% of the percentage of stocks in the S&P 500 are over the simple day 50 moving average. This is not very weak. But see, tech is so heavily market cap weighted that it will bring the market down. And see, what is happening is, like I said, it goes down begrudgingly because tech is weak, but the rest of the market is not. Okay? The rest of the market is not. Now, I just showed you NASDAQ futures, right? If we go to RSP, which is equal weight, S&P 500, look, Jesus. You can't get any more clear of a divergence here. This just made all-time highs yesterday. I just realized that. Do you understand? This is why our market's friggin' crazy. Our market is schizophrenic. Look at that. RSP, equal weight. This is if every stock in the S&P 500 was the same market cap. We made an all-time high yesterday. You can't make that up. That's an all-time high in RSP. That is why our market is begrudgingly trying to go down. You need the rest of the market to get weak, and you're going to see this friggin' market fall. Bad. Okay? You need this thing. Now, this could be the nail in the coffin here. All-time high. Maybe it's time to get some weakness. All right, let's look at XOK. Woo! Woo! Remember this balance forever? That was the ooh, and then we went up, and that was it. That's the look above. Fail. This thing is ugly. It's at 136 right now. It's right here. Almost to this swing low. Okay? Now, I'm going to switch this little thing here to be with my... So I'm going to show you guys. We'll do a round robin here of like expected moves. Okay? And I want to show you how many stocks hit their expected move to the downside. Now, when you hit that expected move to the downside, right here, generally 70% of the time the market will close inside the range, inside this range. Okay? Now, if it blows through it like Coinbase is now, it could just freaking go. Market makers did not price this in. Understand that. It could blow past it and it gets really weak. But generally what happens is if it plays with it a little bit, it winds up closing here on Friday. I've seen that many times. But let's go around the horn. All right, we'll go by alphabetical order. We'll start with Apple. And this is what's going to be like, what? Apple hit its expected move and went past it to the upside. How about those apples? Apple was above its expected move to the upside. Whew. You don't make that up, right? And that's the second most or third most heavily weighted stock in our markets. That's also going to have a problem for the market to go down a little bit. AMD, after earnings, hit its expected move to the downside. We hit last month's lows. Let's move on. Amazon. We have earnings, folks. So remember, when we have earnings in my expected moves, right? What's the upside on this thing? 267. All right. So let me show you. When you have earnings, because my options, when you scan it, when you have earnings, IV is huge. Huge. So the moves are huge with earnings. So that's why the range is like this for Amazon. Okay. Moving on. Let's get in here. Let's get into it. All right. Broadcom hit its expected move to the downside and a 200-day moving average. Now we're bouncing today. Okay. Boeing. That's in the middle. Berkshire Hathaway. Check that out. Hit its expected move to the upside. Smashed it. I was actually looking at that when it bottomed here. All right, so moving on. Coinbase. We just saw it. It's way past that expected move. GE. See, GE is not going to move the market. It's not going. It's crazy because it's stable. There you go. Is your Google. Remember, pre-market, we're down at 316. We're down here. Expected move to the downside, 304. Let's look at JP Morgan. Probably JP Morgan hit its expected move to the upside. Remember, financials just took a downward turn. Okay? Why? Trump was talking about capping interest rates on credit cards to 10%. Well, they threw that out. And then they said, we're not going to do that. How about we make a Trump credit card that it maxes out to 10%? That's why they're recovering. Eli Lilly. Eli Lilly reported earnings. That's why it hasn't touched the expected move to the upside or the downside. Meta, expected move to the downside. Look at this earnings run up. All the way up to 744 and we're all the way back down to 658. Microsoft, it's expected move to the downside. Netflix, expected move to the downside. Nvidia, expected move to the downside. Blew through it. Tesla, hit its expected move to the downside. That's why I'm saying the options market has priced in these moves and they've hit. Okay? We've been keep trying to go down. I don't know what's going to happen. All I know is this is telling me it's overcooked a little bit on some of these stocks. Now the SPY, because of the like I showed you the RSP, right? I showed you the RSP. Remember what I showed you. All right, here's SPY's expected move to the downside. We're not near it. Why? It's because I showed you the RSP and the rest of the market. RSP hit all-time highs, right? So this is going to be relatively stronger than the NASDAQ. It is. Expected moves way down here. So, but the stocks that generally move our markets are overcooked a little bit. Keep that in mind. Keep that in mind. Okay? Now, I'm dropping golden nuggets everywhere here. All right? Our market is very hard to trade right now. That's why a lot of days I sit back, I stalk, because it's a lot of jumbled, mixed messages a lot, and then I usually just play music and we hang out with a couple of the community members and I'm like, hey, I'm not doing nothing right now because, until I can see something that's giving me an edge. All right, let's move on to hourly charts. I know I'm talking a lot. I'm just trying to give you guys golden nuggets. Let's go to those hourlies. I think I might end it here. And we'll do scenarios based on the hourly charts instead of like extending this out to market profile, volume profile. Okay? Let's look at it. Let's look at our charts together. Now, yesterday. What a wild ride. Right? We get the early selling. We take out that swing low. Then what do? We take out last week's lows, right? And then this is what I'm seeing. We came into demand and a prior swing low. What did we do? We lifted off, closed inside it, gave you the discount back to last week's lows, and lifted off. Okay? That would have hit my target. Okay? That's what we did yesterday. Now, in the overnight, what were we doing? Accumulation. Then you swept these highs. That was your liquidity sweep to go lower. And look at that candle. Boom. Boom. We took out yesterday's lows. Now guess what though? Where's the market here? We hit a naked VPOC. That's an untested, most traded price of a day in the past. And now, look at the daily. That's pretty red. Look at the 4-hour. It's pretty red. Okay? This is where the rubber meets the road. You're in a demand. You hit a naked VPOC. You're trying to get back into yesterday's range. Now, we are in a downtrend. Boom, 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 boom. Okay? Down. We are. So, what I would say, could you get an early long? Maybe. If you want to go with the trend right now, you want any kind of premium that comes up. There's a bearish for value gap right here as well. Inside here. to not take that swing high out. Some kind of boop makes another swing high. There you go. Then we can start going again. Because I don't want to just short in this demand. You're asking for some trouble. You're asking for some trouble. Okay. I am going to add a supply zone to my charts that I'm seeing. I don't know why I don't have that on there. Maybe it didn't form until we came in here. So I'm going to just right here. That is a supply zone. Right with that bearish fair value gap that's still there. Right here. Then you do have a bearish fair value gap right there. Now that is poor structure. However, in a weak market, it could be resistant. So I'm going to go ahead and add a bearish fair value gap right here. Okay? This could be where the swing high forms to short. Okay? To short. Now, again, remember, this is the most traded price of the year and of the rolling of this year and the rolling year. So go back a year, that's how much trade has happened in this area. We are below that. That is bearish. I said this yesterday. That is bearish structure. This is telling us the market could just rip lower. It's just begrudgingly going. But we're trending lower. Okay. Now, let's get into scenarios here. Okay. Okay. So, if I want to go long. I'm sorry. We're not going to start with the longs. We're going to start with shorts. Okay. If I want to be short. Now, we're trending lower. Check. That already is going to make me go, all right. I probably want to be in a short today. It's probably going to be the easiest trade. So what are we going to look for? We're in demand here. We're trying to resolve this. So for me, any kind of move up into this bearish fair value gap, and maybe we slam into this supply, and you create another swing high like this, which would be an hourly candle that has two lower highs around it, like could be a candlestick that looked like that, and then that around it, that would be a swing high. To then short, and I don't know if this would be the low, but let's say it is. That's the overnight lows. You target that. Make it easy on yourself. Because if you short here, you don't have a great range, a target. Get the premium to sell. Get the premium to sell. Now this can come into here. It could come in. I don't know. I'm just looking for some type of pullback in here that finds sellers, that finds the trend, keeps the trend going lower. Now, this is a little different from some of the other openings, from the overnights. They've had strength lately. This is finally an overnight with weakness, so this changes things a little bit. Notice the overnight here had weakness, then ripped up and it was ripping up in the real time, right? Then we had another overnight strength that got sold off in the real time trading hours. Then we had another strength in the overnight that got sold off in the real time trading hours. And then look, we kind of tried to have the strength in the overnights, but we lost it. This is the first time we're starting out weak. So it changes it a little bit. We're not like in the past trading, we would be up here to fall. So that's why I'm saying the system that I've said that the early short and the late long has been the it. This changes that a little bit. Changes it a little bit. Okay, so you guys know my short. Let's go with the long. Okay, what I want to see, okay, is based on this chart, right? You could have a long here. You just swept these last two lows. I would like to see the candle close inside here, inside yesterday's range. Let's say we open and do one of these, right? and then try to hold, make a new swing low. This could fire off, and I'd say be careful inside here. Somewhere in here, I probably want to take some off. This is a little bit of a poor structure. So this is a slippery slope here. That is a one-way move. However, if the market is weak, you're going to get resistance, and that's bearish. So be careful in here. That's what I'm saying. The long is like, you can get it. Don't get me wrong. You can get it. Okay? And I'm going to look for the internals. I'm going to look for it and say, oh, wow, we're starting off pretty strong. Now, remember, you could have a scalp mentality. Now, my version of a scalp is not a point. Okay? It's not a point. Yes, basically, trader, I might, it might be, now in this volatility, it might be a 5-point risk to look for a 10-point. Something like that. A longer trade for me would be a 10-point for a 20-point. Right? I could see today is going to be very volatile, so you just have to adjust your risk. All right? So this is pretty simple. Okay, but I would say the trend is lower, and you probably want to look for a quality short. I'm not sure if today we get tech strong. We might. The caveat to all of this, as I said, the expected moves have been hit in a lot of the major tech stocks, which makes the market trickier. And the QQQ has already hit close to expected move, and I just showed you the RSP hit its all-time high. Now, maybe that's ready for the rest of the market to fall. I don't know. That's what makes this market hard, because there's a lot of cross currents as I'm speaking. I'm not saying it's a home run. Oh my God, this is so easy. It's not. Nasdaq. Remember, this is relatively weaker. Okay, it's relatively weaker. So we have our downtrend, right? Boom, 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 boom. Lower highs, right? Lower lows. So we have our downtrend. Check. We are below major trading volume. Remember the look above and fail that I showed you on the daily chart in the Nasdaq ES futures. The Nasdaq futures. Remember I showed you that look above and fail. Okay? Check. Bearish structure. Downtrend. Check. This is last month's lows. We're in a major demand zone. Major. That's a 6 and 8, a 12-hour demand zone. Let's look at the back. Let's go back. There's this consolidation. Okay, you need to get past that. Then there's weak structure, poor structure below that, and another major demand. Okay, so major demands are not easy to just rip. They're not. They're not easy. So that's where we are. Where are we battling? Let's look at it. What are we battling? Major demand. We are below currently yesterday's lows. Okay, we are below yesterday's lows. Now, it's really all about tech today. Does tech catch a bid? I don't know. Right? That's really going to determine if I really want to try to along down here. Okay? Now we do. Let's put it on our charts. We do have a bearish for value gap here. So why don't we just add that to the chart? This will be a barometer. This is our barometer. All right, that's the barometer right there for me to see how it will react in this area. You get resistance there, you're shorting that sucker. Okay? You are shorting that sucker. And this is now a liquid level as well. This is your overnight lows. Okay? That swing low was from yesterday. I'm going to keep that up. That I can get rid of. This is a swing from the past. I'm probably going to get rid of that now. Okay. So, let's see what it does with this overnight low. Like I said, this can really fall. but you got to be careful. All right, now let's get into the NASDAQ scenarios. I'm going to get you out of here. All right, so let's look at this. Remember, downtrend check, bearish structure check underneath major volume, look above and fail. We talked about it. It points to lower. I don't think this market's going to make it easy. Okay, so what are we going to look for if I'm short? If I'm short, I'm going to look for a pullback, a nice bull rally, bear rally, I'm sorry, into this fair value gap. As long, and now number one, if we get any type of resistance and make a swing high here and make a lower high, you're going to short targeting the overnight lows. Now, this could go up. Trading is not perfect. This could go up and tap into, there's a little supply zone here, anywhere here, and also go boop, hit yesterday's most traded price, and also lower high. You're going to short that. Target overnight low. And it's gravy. You're in a major demand. So that's why you want the premium, sell at a premium, and target a target. You don't want to short here. What are you targeting? This doesn't make sense. You want the most pain. Get some longs roped in here to smash them. Okay? Smash them. Pops are being sold. Okay? You don't want to take out that swing low. That would change the trend. Okay? Now, I should have put that on the other chart, but I'm going to put it here. Okay? It's 920, so I'm going to, this is the last scenario. Okay? Now, the long. That's the overnight lows. We're in a major demand. I don't like shorting in major demand. However, the market will tell you, oh, I don't care about this demand if it's super weak. It will blow through it, and that tells you, ooh, sellers are strong. Okay? Everything is a temperature check. Everything is a temperature check. Okay? That's why you don't look at things like, oh, this is a bearish value gap, I'm shorting. You don't look at it like that. You want to see how it reacts. Major demand, I want to see how it reacts. Okay? Market will tell you. It's called MGI, market generated information. The market will tell you, oh, we're respecting this fair value gap. We're not respecting it. Then you got to trade accordingly. Okay, so what am I going to look for if I want to go long? Well, let's sweep the overnight lows and then come back inside yesterday's lows. Maybe put a higher low in. Let's say tech is leading. Yeah, I want to go long. Then I'm going to be cautious around this area. I'm going to be cautious. Now, before I let you guys just say, hey, I probably take it off here. I might. Now, let's say the market does this. Rips into this supply, which will not be easy. So let's say you go like this, and then you do this. Boom. You break these swing highs. You get a trend change, a market structure shift, and let's say, boom, you go like this, anywhere in here, and we do this. And then, folks, there's poor structure. We could go rip up to this 2550s. This would mean that the market structure shift changed from a downtrend to an uptrend, and now we're going to be off to the races. I don't know if that happens, but you got to be prepared for it. A lot of tech stocks have hit their bottoms, according to my expected move indicator. Okay? That's what I'm looking for. Remember, down here would be my discount for a long. I'm not saying get long here. But if we take that out, there's poor structure, it can move. Okay? Very hard markets. Very hard. You have to really pay attention. That's why I read my internals. Okay? Please smash that like button if you enjoyed this analysis. That'd be much appreciated if you do. Now, remember, I do this every morning. Join me, subscribe, set an alert, give you the market story, the news, the calendar, the leaders and the laggards, and technical analysis and the long and short trade scenarios I just gave you. Remember, I'll be live today. Join my Discord, Confluence Trading. Go to my YouTube homepage, click on the link and sign up. What are you waiting for? Let me be your indicator. Okay? Hope to see you in there. I will be there live. That's why I'm not posting a lot in my Discord. I am doing live commentary. Okay, and pay some tunes in there. I'll be relaxed when I'm just sitting back going, hey, I don't like this market right now. It needs to give me something. Show me something. All right? So everybody, remember, no trade's a trade. Amazon earnings after the close. Hope everybody has a green day. I'm going to try to be laser focused. It's a new day. Okay? I'm going to be back on track. So everybody, if I don't see you in my room, I'll see you guys